Anyway, well, thank you everybody for taking some time out of your Friday, your Flag Day, which I'm sure everyone is pretty excited about. I have an Irish flag in the background here. I want to note on Flag Day that it's important to remember that U.S. flag code dictates that you're not supposed to turn the flag into any clothing, and you're not supposed to use it in any way deformed from its original form, which is kind of funny because it's been amended several times. Anyway, all right. I think that we need to call this to order. And Will, do we need a motion to waive quorum?
I believe we will, but first, if we'll just take the roll call just to make sure, we'll do that first.
Okay.
So we'll start with committee members that have registered for the call. Illinois Senator Dan McConkey. Indiana Representative Matt Lehman.
Here.
Indiana Representative Peggy Mayfield. I see she is here. Kentucky Representative Deanna Gordon. Kentucky Representative Rachel Roberts. Massachusetts Representative David LaBeouf. Minnesota Senator Paul Utke.
Here.
Montana Representative Nellie Nickel. New York Assemblyman Ken Blankenbush. New York Assemblywoman Pam Hunter. Oklahoma Representative Mark Tedford. Texas Representative Tom Oliverson.
Here.
Utah Representative Jim Dunnigan. I know he is planning to join momentarily. We have Vice Chair Representative Sarge Pollock.
Here.
And Chair Bennett. We'll go to non-committee members that have registered. Alaska Senator Jesse Bjorkman.
I'm here, thank you.
Better not let that.
Kentucky Representative Jill Berry. Georgia Representative Sandra Scott. Kentucky Representative Jim Gooch.
Here.
Maine Representative Poppy Arford. Pennsylvania Representative Robert Mirsky.
Here.
Wisconsin Senator Lisa Subeck. Okay, are there any other legislators on that I didn't call?
Representative Deanna Fraser Gordon, Kentucky.
Thank you.
Edmund Jordan, Louisiana.
Thank you. Okay, Mr. Chairman, we will just need a motion to waive the quorum.
Okay, we need a motion to waive the quorum. I saw Sarge moved. Do I have a second? I think I saw Paul second it.
Beautiful. Mr. Chair, you're going to call that question?
What's that?
You're going to call the question now?
Yes, yeah, you're right. I apologize. We have a motion and a second. All in favor?
Aye.
Aye. Aye.
All opposed? Hearing no one opposed. All right, good morning and good afternoon, depending on where you're sitting. The purpose of today's meeting is for us to conduct some business in advance of the meeting in July in Costa Mesa, so the committee is able to handle all the issues on that in a timely manner. So we have several items on today's agenda. The first is being a model law that we'll be voting on. So let's get started on that. And that'll be Representative Oliverson. You are on the deck. This is the Catalytic Converter Theft Prevention Model Act. If you'll recall, at our last meeting, we kind of got consensus that we're more interested in voting on a resolution or on a model than a resolution. So that's what we're going to do now, but I will turn things over to the sponsor of the model, who actually also happens to be the president of NCOIL, Texas Representative Tom Oliverson. Representative Oliverson.
Thank you, Mr. Chairman. I appreciate you calling the meeting, and my thanks to all my colleagues for being on the call and giving us an opportunity to consider this. I think we've made a lot of progress on this. I think we've taken a lot of constructive feedback. It has morphed into something that I hope and I feel certainly is much more agreeable to a wider audience and sort of takes into account some of the concerns that were raised. I would point out that at our meeting in Nashville, as we were talking about, the paucity of things that we as lawmakers could do to actually address the rising cost of property and casualty insurance across our great land, that this was sort of one of the few things that was pointed out as, you can't control the weather, you can't control inflation. And obviously driving behavior seems to be a little bit erratic post-COVID, but you certainly can address issues of theft. You can address building codes and things like that. So this is one of those things that we can, as a body, say, I know, okay, maybe it's not like the smack dab in the middle of all insurance policy, but from the standpoint of attempting to provide reasonable solutions to cost containment problems that we're all struggling with, dealing with issues of property theft that are certainly driving up the cost of insurance across all 50 states is definitely in our wheelhouse. And I think it would be a positive step for us as an organization to take a position on this. As I've said before, and I'll say it one more time, this isn't a victimless crime. And I know that we're not the criminal justice group, but, in my home state, this Model Act is named after a Harris County Sheriff's deputy who was shot to death by the gang of organized criminals that were perpetrating the majority of catalytic converter thefts in our great city of Houston. So it is the Deputy Almendarez Act in Texas for that reason. So with that, Mr. Chairman, I would like to adopt the policy and go through the process for that. But obviously, if there's discussion, we should do that first.
Thank you, Representative President Alderson. And I do want to open this up to anyone who has comments or questions for Representative Alderson. So if you want to jump in or use the raise hand function on Zoom, which I found about 3 years after Zoom became a thing, please do that. And then also, whether you're a legislator or somebody representing an industry, let us know who you are and where you are before you make your comments. Does anyone have anything they'd like to say? Eric DeCampos would like to say something. Go ahead, Eric.
Thank you, Mr. Chair. Good afternoon. My name is Eric DeCampos. I represent the National Insurance Crime Bureau. We are a nonprofit organization that works with state and local law enforcement, as well as insurance companies to detect, prevent, and deter insurance and vehicle crimes, and that includes catalytic converter thefts. I just wanted to speak in support of the Catalytic Converter Theft Prevention Model Act and emphasize that this model will establish important standards that will help combat catalytic converter thefts. I do want to note that while we've seen the price of precious metals decrease recently, thefts continue to persist, and the impact on insurers and consumers is quite clear. In fact, I think many of us know and have seen the recent murder in Los Angeles of an actor who was killed by perpetrators attempting to steal the catalytic converter from his vehicle. And so I wish to underscore again that now is not the time to take our foot off the gas pedal, but rather to move forward with this Model Act. And I also wish to remind this committee of the effectiveness of state legislation already enacted in some jurisdictions in combating catalytic converter thefts, as attested by both insurers and law enforcement alike. So I wish to thank the committee for the opportunity to speak today, and NICB urges your favorable vote on this Model Act. Thank you.
Thanks, Eric. And at the risk of making this a longer meeting than it needs to be, Eric, could you specify some of the things that you've seen positive results of some of the legislation at the state level on this issue?
Yes, we've seen catalytic converter thefts decrease in jurisdictions that have pursued catalytic converter theft legislation. Anywhere from, and we've seen various degrees of this from states that have pursued restrictions around transactions involving used attached catalytic converters to record keeping requirements. And we've also seen some insurers attest to the effectiveness of this as well, and how catalytic converter thefts have been a cost driver for insurance. And following the enactment of legislation, that we've seen that price tag or that cost decrease due to a decrease in the actual thefts of these devices.
Thank you so much, Eric. I really appreciate that. Does anybody else have anything that they'd like to add on this issue?
Mr. Chairman, not specifically on this issue, but I'd just like to add the reminder to folks that if you're not actively speaking, please put the audio on whatever device you're onto mute.
Thank you, Tom. And I will excuse you for not using the hand raise function. All right, since I haven't heard from anybody else, I think we will go ahead and take a vote on this. And I apologize, I think this is the first time I've conducted a vote via Zoom. Do I call for the vote, or does Will call? Me, well, you pointed just generally speaking. Okay. All right, I will, who would like to move to vote on this model? I need a motion.
I move.
Moved. Do we have a second?
Second.
I have 2 seconds. All right, all those in favor of adopting the catalytic converter theft model, please say aye.
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 Yep, thank you. All those opposed, say nay. It seems to me that the model has been adopted. Thank you so much, Representative Oliverson, for all of your work on this, and for everyone who's contributed to the conversation. This will now be sent up to the Executive Committee for ratification. All right. Let's see what we got next. Next on our agenda is a continued discussion on the Strengthens Home model, and I'm glad to see Representative Dunnigan here. We did discuss this briefly at our last meeting in Nashville, and in the ensuing months, the state of Oklahoma has passed the Strengthens Home model, which is why I assume Representative Dunnington, a great fan of the state of Oklahoma and specifically of me and my politics, I'm sure, wants to do it in Utah as well. So please, Representative Dunnington, go ahead.
Thank you, Mr. Chairman. Yes, I love Oklahoma, and I appreciate the chairman. And you are correct. You know, I think it's very helpful to look at states who have stepped into a space that we're considering for a model and see what we can glean and learn from them. And so I'd like to share a little bit about what I like about Oklahoma. It fleshes the concept out, puts some more meat on the bones, and provides some additional detail and guidance on how states might set up a type of program where they can assist homeowners in strengthening their homes and hardening their homes against natural disasters, and trying to do so in a way that it doesn't have a big drain on their general fund. So a few of the things I'd like to highlight from
a Zoom call.
a few of the things I'd like to highlight from the Oklahoma model is the Oklahoma model requires the department to use its best efforts to provide grants or funds or obtain grants or funds from the federal government or other funding sources to help complement state funds. So it doesn't just say, we're only going to do state funds, let's look out and see whatever money might be available elsewhere and use that. And then it also limits it to single family primary residences. We discussed this a little bit in Nashville. As a state, should we be providing grants to harden homes for a second home when there are primary homes that haven't been hardened yet and people need financial assistance to do that? So the Oklahoma model limits it to single family primary residence homes. And then it also prioritizes the grants to those that are lower income and those that live in locations that are higher risk to catastrophic weather events. And I actually like all those things. It's focusing it more on where it's really needed. And then it also sets up a program by way of a revolving fund financed by the grants and specifically designated funds. So that's not an exhaustive list of everything that's in the Oklahoma bill or the Oklahoma law, but those are some of the ones that stood out to me. And so today I'm very interested in any feedback from the Oklahoma law and what, if any of that, should make its way into the current model. I'm looking forward to our July meeting because we're going to hear from the Oklahoma Insurance Commissioner, Glenn Mulready, and he's going to provide some details on what went into developing law and give us some tips on what we should be looking for and be aware of in developing our model. So there are a number of states that are looking at this issue. NAIC is looking at this issue. And so I think it's important that we come to an agreement, a conclusion on what we want it to look like. So in our November meeting in San Antonio, we can take action and have this model ready for the upcoming legislative sessions. Thank you, Mr. Chairman, and I'll turn it back to you.
Thank you, Representative Dunnigan. There was a representative in Oklahoma called Dunnington for the longest time, and I regularly mispronounce your name, so I apologize. Yes, we passed the legislation overwhelmingly in Oklahoma, and I also look forward to Commissioner Mulready's presentations. Anyone interested in speaking on this, please use the raise hand function and introduce yourself and who you are with before you make your comments. Matt Overture, go ahead.
Well, Mr. Chair, should I let Representative Pollock speak before me? He's actually raising his hand.
Oh, sure. I just saw that at the bottom there. Sure. Go ahead.
So it's my turn, Mr. Chair?
Yeah. Yes, sir. Yes, sir.
Okay. Just wanted to kind of comment and thank you for the opportunity to share. I sponsored our fortified bill here in the state of Kentucky this last session. We tag teamed up with Commissioner Sharon Clark, Department of Insurance, designating $5 million of unrestricted funds made up from fines and fees from different insurance companies and things. So it's our insurance trust fund that we're using. It's kind of a pilot program for over, I think, a 2-year period. It also provides some funding for contractors to get certified to put on fortified roofs. So just a lot of good things there. I think obviously addressing the storms that we're seeing here in the state of Kentucky to ease the pain of a claim. And so obviously I'm all in and would love to just share what we have in our bill that we passed this past session to make this model the best it could possibly be. Thank you, Mr. Chair.
Thank you, Sarge. We now have the venerated Representative Matt Lehman in the queue, so I'll go to him too.
All right, thank you, Mr. Chairman. And maybe I missed this when Representative Dunnigan was talking. I had to step out for just a brief second. But the question I have is this: as we move with these models, and we're talking about, I think Sarge, you said $5 million from the insurance, kind of a trust fund. Is there what's happening from the standpoint of carriers? Is there any discussion with carriers? Maybe they can opine here if they're here. If we're going to incentivize me to build a less destructive house, how is that going to equate to a reduction in premiums? Will there be credits, given to, if I put a roof on that's based on this now, and I get this incentive, I put this roof on, will I see a significant change in my insurance premium? Because I'm all in favor of this, but I also think the other side of that table is, if I spend the money to do this, it's like anything else we have right now, and I'm in this business, is if I do that, what's it going to save me? So if there's no savings from the insurance standpoint, will we get people incentivized to do it?
That's a great comment, Matt. And I remember at the CIP meeting last summer, we had a brief conversation about this and whether to require discounts based on more fortified homes.
And we hesitate when we talk about requiring discounts, but I'd be interested in what the industry is saying. They're looking at from their perspective is, if you do this, will we as an industry step up?
Right. It's a great question, and I hope that someone on the call can speak to that.
his email.
And I did want to get back to the NAMIC representative if he is still. Yeah, there you are. Matt, would you like to jump in?
Sure. Thank you, Mr. Chair. So just a couple brief comments. We appreciate the continued conversation around mitigation. This is something that we focus very heavily on in the States and in Washington, D.C. in terms of incentivizing mitigation efforts. If you recall last year, the model started with just a mandatory discount, and we had concerns with that piece and really wanted to kind of broaden the conversation to additional incentives and additional ways to do that in addition to the discount. The Kentucky bill that Representative Pollack mentioned did have a insurance discount mechanism to it in addition to the grant funds. So as far as that's concerned, as we continue to trend towards additional options and ways to incentivize folks to mitigate, we are certainly open to those. And I believe the mitigation or the mandatory discount piece continues to be a part of that conversation, to Representative Lehman's point. So with that, we appreciate the direction this is going and the continued conversation, and look forward to further conversation in July.
Thank you so much, Matt. Same. Is there anyone else who wants to speak on this issue before we move on? Okay. Well,
Mr.
thank you for
Chairman,
Oh, yeah, sure. Yeah.
I'm sorry, I could not raise my hand because I'm driving. This is Representative Oliverson. I wanted to, if I could, just provide some information that I heard. We had a committee hearing in Texas on this very issue on Tuesday of this week. And to answer Representative Lehman's questions, some things came up looking at the Alabama program that they have there. We had someone that came and testified, which I thought were kind of interesting and for consideration as we move forward on this policy. In the Alabama program, moving to an IBHS fortified standard increases the value of the home on average by 9%, which is obviously more typically than the amount of money invested in getting to that building standard. So, and because it gets certified, that's transferable. So it's a permanent increase in the value to the property. They told us that in Alabama, on the windstorm coverage alone, that the presence of the IBHS fortified standard lowered the cost of windstorm premiums between 20 and 50% on average, just for some numbers. And I just wanted to contribute those facts to the conversation. Thank you.
Thank you so much. I really appreciate it. And those are some incredible numbers. I hope that we're able to get into that a little bit more during the summer meeting. Anyone else want to speak? I think there was just a comment from Wes said, on the chat. Greatly appreciate Representative Dunnigan's work and leadership on this issue. We look forward to NCOIL adopting a model on this issue this year. Thank you, Wes. I look forward to having a beer with you at the bar. All right, we're going to move on now to our discussion on the proposed title acceptance pilot from the Federal Housing Finance Agency, or FHFA. Including the materials that we were sent on this meeting is a letter that was sent by President Oliverson to the director of FHFA, expressing concerns about the agency's proposed title acceptance pilot, which would permit title insurance obtainment requirements to be waived in certain transactions. I'll let Representative Oliverson discuss this a bit more, but as you can see from the letter, there are a lot of concerns about this pilot, mainly from the standpoint of federal intrusion on the state-based system of insurance, which is why we're all here. So I'll now turn things back over to Representative Oliverson. Please go ahead.
Thank you, Mr. Chairman. Just briefly, I mean, the letter's before you. I'll just provide a little bit of commentary. This kind of hit us out of the blue. It was not on my radar screen until the Nashville meeting, and it was kind of presented to me by the title insurance industry. As you know, members, the title insurance product is the only insurance policy that you purchase that is good for as long as you own that home, and it essentially is there to protect you against a variety of issues resulting from ownership of that property and encroachments and things like that. in our states, and this is the thing that particularly disturbed me about what the Fed was proposing, or the federal government. Most of our states have a guarantee act that title insurers pay into whenever they sell a policy, that essentially in the event that something happens and there's a claim against the policy, or there's fraud, or any kind of wrongdoing, there's a guarantee act that steps in, that is run by the state, that essentially makes the policyholder whole. And so I think the thing that really disturbed me more than anything about what was being attempted here is that none of these changes would be protected by any of the guarantee acts that exist in any of our states. And so a person that purchased a home through this program would essentially be waiving or losing all of those lifelong protections, and the guarantee that if there was a mistake made, or there was fraud, or some other kind of issue, that there was a backstop where they would be made whole. And so it's a terrible encroachment. The only other thing I'll say is that when we investigated, what we found out, what NCOIL found out, was that apparently this was sort of a hastily thrown out thing. It came up because there was a friend of the administration, and it was sort of one of these things where an industry, a company, an individual stood to profit heavily by partnering and underwriting and whatever for these Freddie Fannie things. But I think it's a great example of a clear and present threat to the state-based system of insurance regulation, and literally just kind of came out of the blue. So I'm hopeful that they will back off on this. And if we can keep the pressure on them, hopefully we get up there at the end of this month on the Hill. We can let our members of Congress know about this and our opposition to this encroachment. But that's essentially all I have to report. Thank you.
I've been muted this whole time, apparently. I apologize. Can everyone hear me now? Great, thank you. We're going to let everybody have their say on this today, but we do have some speakers that we've invited to present on this. The first speaker is the senior advisor in the office of the director of the FHFA. And I've decided today that we are on a first name basis because I don't know how to pronounce his last name. Dan, take it from here.
Well, you got my first name right, so that's a good, you're one for one. No, I appreciate it, Forrest. Dan Fickler here from FHFA. I appreciate the invite. Will, thanks for bringing me on. And actually, I'm very glad to be part of this group because actually sort of hearing some of the lead-in, I think there's some, misconceptions about sort of what the Fannie Mae pilot that I was invited to discuss covers and what it doesn't cover. For example, it's I'll get into the details, but it's actually unrelated to homeowners title insurance. It's purely about lenders title insurance policies, so it has no impact on consumers. But let me back up. Like I said, I appreciate the chance to be here. So I'm with FHFA. I won't assume everybody knows who we are at FHFA, but we're the regulator and the conservator of Fannie Mae and Freddie Mac, who are government-sponsored enterprises whose mission is essentially to support liquidity in the secondary mortgage market. They buy mortgages, both single-family and multifamily, from lenders all across the country. They issue mortgage-backed securities based off of those underlying mortgages. Essentially, that takes capital from the global capital markets and brings it into domestic mortgage markets to support mortgage lenders. So just as a kind of a level setting, right? So one of the things that FHFA does in its oversight of both Fannie Mae and Freddie Mac is that on an annual basis, we produce scorecards, public scorecards, and all those kind of things that we would like to see Fannie and Freddie focused on over the course of the year. And I bring this up to highlight a couple points that have been in sort of the last couple of years, scorecards that are relevant to this discussion, and actually much broader than title insurance. So we've asked them to do a couple things. We've asked them to leverage data, technology, other innovations to promote efficiency and cost savings in mortgage processes. And then on a related note, we've asked them to explore opportunities to further sustainable home ownership through measures that positively influence affordability, including transaction costs in a manner that maintains safety and soundness. And really, I bring that up to say those sort of directives are the basis for kind of a lot of work that's underway across the federal government, but certainly within FHFA, on looking at mortgage closing costs and looking at whether there are ways that technology, data, innovation can be harnessed to bring down mortgage closing costs. I think probably folks are well aware there's a housing affordability challenges, some call it a crisis all throughout the country. And so trying to find ways to kind of responsibly reduce the resources, the funds that homeowners, prospective homeowners need to bring to the closing table in the form of closing costs. Because, the higher those closing costs go, the more it's a deterrent, particularly for first-time homeowners. So, this closing costs can cover a whole range of things. Like, for example, we've been doing quite a bit of work over the last several years on the appraisal front, home valuations, to leverage some new technology and data innovation there to bring down costs. But title insurance is obviously one, important component of mortgage closing costs. So, what we've asked, not just Fannie and Freddie, but the industry, others, is look, we're seeking ideas for ways to kind of meaningfully reduce the costs associated with providing title insurance, right? Now, we've gotten several ideas, some from Fannie, Freddie, some from the industry, some from consumer advocates. It's been a really good sort of process or feedback that we've received. One of those ideas, which was essentially formed the basis of the pilot program we're discussing today, the main goal is really to test whether innovation and technological developments with respect to title search capabilities can lead to reduced costs without adding incremental risk, right? So it's really about sort of innovation in the way that title searches can be conducted and the models that are used as part of that process. So let me back up just a minute. So what are the existing Fannie Freddie requirements? So they both have long-standing requirements as it relates to title verification, right, for every loan that they purchase. So essentially what they do at its core is they say, if you're a mortgage lender selling a loan to Fannie or Freddie, that lender has to rep and warrant that the loans are valid first liens, that they're free of title defects and the like. So on top of that, to further minimize the risk, they say, okay, well, the lender's repped and warrant to this, but they also, in most cases, generally speaking, require the lender to get some sort of third-party verification of that fact, right? And in the vast majority of cases, that third-party verification is a lender's title insurance policy. And I want to just differentiate here, right? The lender's title policy, which travels with the loan, versus the homeowner's title insurance policy, which stays with the borrower as long as they're in that home, right? So Fannie and Freddie don't have any requirements related to whether or not the homeowner purchases title insurance. That's, the decision for the homeowner. What they do require, generally speaking, is that the lender get a lender's title policy as an additional means of protection behind that rep and warrant. So one last notable point I'll make about that distinction is, even though the Fannie Freddie requirements, the long-standing requirements have been for lender's title protection, a lender's policy, it is the borrower who ultimately pays for that policy. That cost is passed through by the mortgage originator to the borrower in their closing costs. So let me sort of get to how that sort of comes to the title acceptance pilot. So, coming back to the goal, right? Can improvements in title search capabilities meaningfully reduce costs in this space? So sort of the crux of the pilot is this. So what Fannie Mae would do is work with third-party model providers, vendors, and the like to determine, for a population of low-risk refinance loans in particular, whether they can determine which loans or the population of loans that are very unlikely to have sort of unexpected title defects arise in the future. And there are several vendors that have been, out in the industry working on sort of products, platforms, algorithms to try to do this, right? So it's nothing new to Fannie or Freddie, but what Fannie wants to do is work with some of these vendors to try to identify that population of loans. And then for those loans that would be eligible for the pilot, essentially what happens is, I mentioned that Fannie requires the lender to rep and warrant clear title. So what Fannie would be doing is relieving the lender of penalties associated with whether or not those reps and warrants are breached at a later date. So if you think about the way it works today, the lender has to make this rep and warrant. If there's a title defect that's found at a later point and the lender doesn't address it or can't address it, then the lender has to repurchase that loan from Fannie or Freddie, which the lender doesn't want to do. That's a costly proposition to them. So essentially what Fannie is proposing to do is to say, okay, essentially a hold harmless provision for the lender, right? Waiving that rep and warrant that the lender has to make. And by extension, if the lender does not need to make that rep and warrant, it obviates the need for the lender to go out and get the lender's title insurance policy. Now, again, that's all unrelated to whether or not the homeowner chooses to purchase a homeowner's title insurance policy. Fannie would waive the rep and warrant for the lender and the requirement that the lender go out and get a lender's title insurance policy. So, outside of that, the process works kind of in the way it does today, right? You'd still have a settlement provider that, does there'd be a title search process as part of this system, right? To determine if there's any encumbrances or title defects prior to the purchase. You have a settlement provider that handles, the process at the closing. And then, if there are any title issues that arise on the back end, those are addressed by Fannie Mae, much in the way that they currently do for loans that are already in their real estate owned portfolio. Those are loans that are acquired due to foreclosure or things of that nature. So sort of backing up, how does this get back to the sort of stated goal of trying to sort of put downward pressure on closing costs? Well, I mentioned that, in pretty much all transactions, the consumer is the one that pays for the lender's title insurance policy. And so our expectation is if they're no longer on the hook for paying for that policy for these loans, that would produce a savings of somewhere between $500 and $1,500 per loan, depending on the type of loan, the jurisdiction you're in, lots of factors that go into the overall cost. Thinking about sort of the scope, as I mentioned, this would be during the pilot phase, limited to low risk refinances. So refinances where the loan to value ratio is below a certain level. Probably in a handful of states, handful of jurisdictions to test this out, really to determine whether it works, right? Determine whether the technology works, whether the process works from both the lender's perspective and the borrower's perspective. I would say, just also thinking about scope, no lenders or vendors have actually been selected for this yet, so we still have a little ways to go. Fannie Mae is actually going to be putting out a request for proposals for lenders to sort of submit their proposals to be part of this in the next couple of weeks. And that's an important point. I was a little disturbed by some of the comments just recently about, alluding to, particular companies sort of, I didn't quite follow, calling in or, something to that effect, but it's going to be an open competitive process for vendors that would want to take part in this. The one other piece I just wanted to address quickly on some of the commentary from earlier. So this pilot has been sort of discussed in the public domain for about, going back to last winter, so about 15 months or so now. In fact, our director was doing her annual testimony before a House Financial Services Committee last May, so about 13 months ago, and had received a bunch of questions about it. So I would just respectfully push back both on the notion that something was came through just recently or hastily. It's actually been something that's been discussed in some way, shape, or form for well over a year now. So just wanted to put that out there as well. And I guess I'll close. I'm sure I'm probably bumping up against the time limit Will gave me, but last thing I would just say is, like most Fannie Mae or Freddie Mac pilots for that matter, kind of the goal here is to, test the technology and test the lender processes in a small population of loans, in a low risk population, determine what works. Maybe it'll work well, maybe it won't. And then from that point, look at the data to determine whether or not, to move forward with with this type of process for any other loans. So let me stop there. I'm sure I've gone over my time, but happy to discuss or answer any questions folks might have as well.
Thank you so much, Dan. And the last name being pronounced with a silent T was not what I was expecting. I was really on the hard C or a soft C. Anyway,
It takes
I
everyone at
appreciate.
least 5 guesses, so you're in good company, believe me.
Gotcha. I just didn't even try. Well, I appreciate that context that you provided. Now I'd like to hear from Ed DeMarco, who is the president of the Housing Policy Council and himself a former FHFA director. So I'm not sure what he could possibly have to say about this. Apparently, he's got some subject matter expertise. Ed, please go ahead.
Very good. Thanks for this opportunity. I am Ed DeMarco. I'm the president of the Housing Policy Council. We're a small trade association, but we're made up. My membership is 30 some of the largest mortgage lenders, mortgage servicers, mortgage insurers, mortgage title companies in the country. And as the chairman noted, I am a former acting director of FHFA. I want to thank Dan. I thought he did a nice job summarizing what FHFA is doing here. The things that he walked through are consistent with my understanding of how FHFA is approaching this. While I've got a different view about it than FHFA, I thought he did a nice job presenting it. So let me offer just a few thoughts here. So first, I want to start by recognizing and acknowledging the exclusive regulation of insurance granted to states, including not just title insurance, but mortgage insurance. Unique from other financial institutions and products, which have a mix of federal and state regulation, insurance is clearly a state regulated matter. But the GSEs, Fannie Mae and Freddie Mac in this case, are also unique. And what I want to start with is talking a little bit more about Fannie and Freddie and what makes them unique. So let's start with, what does it mean to be a government-sponsored enterprise, or GSE? Fannie Mae and Freddie Mac are just 2 of a handful of such entities. So unlike all other corporations in the U.S., GSEs receive their corporate charter from the U.S. Congress, not from a state government. Congress does this in order to secure a stable, targeted flow of credit to a particular sector. In the case of Fannie and Freddie, for residential mortgage finance. Now, the GSE charter that Congress creates comes with certain benefits and constraints. Right? The only companies that can get it are the companies that Congress creates. The benefits Congress grants include things such as tax exemptions, security law exemptions, and other benefits such as line of credit with the Treasury Department and special treatment of their financial obligations that make them more attractive to investors. Now, in exchange for these benefits, Congress limits the corporate activities of a GSE to a specified market and market activity. In the case of Fannie and Freddie, they are tasked by Congress with creating a liquid secondary mortgage market in which eligible loans may be sold by lenders to investors, allowing lenders to recycle their capital to make more loans. Now, this package of benefits is very valuable and is only available to the GSEs. So Congress also placed restraints on where and how those benefits may be used. And in particular, in 2008 legislation, Congress directed FHFA to use a process for new products and activities to make sure that any new product or activity at Fannie and Freddie is consistent with the intent of this framework. Now, the title acceptance pilot announced in early March enables Fannie Mae to begin self-insuring title risk on a defined subset of refinanced mortgages that FHFA deems to be low risk. As Dan went through, the purpose of the pilot is to test out a concept, but if it's successful, expand or make permanent its use. When the pilot was announced, the Housing Policy Council sent a letter to Director Thompson outlining our concerns, and I'd like to summarize them for you in just a moment. But I'll also say our letter detailed the important risk management functions of title insurers and title insurance. We pointed out that title insurers protect the integrity of the mortgage transaction, and much of the work that they do is curative. That is, before the loan settles, their whole point is to try to identify any defects in title and cure it before you actually have a loan settlement. The title insurance component covers the remaining risk of what might have been hidden or wasn't discovered in the curative process. So as I say, our letter to FHFA back in March, which is on our website, raises both process and risk management concerns. In the process area, we described our concern that self-insuring title risk may exceed the GSE's authority to operate just in the secondary market, not the primary market. And we also described why we felt the pilot should trigger a new product review by FHFA, which would have allowed for public notice and comment. In the substance area, we discussed how the pilot encroaches Fannie Mae's beneficial status as a GSE to compete directly in a market already well served by private companies with private capital at stake and subject to a state regulatory regime. We also pointed out how title insurers, subject to state regulation, must satisfy prudential regulatory standards, including reserve requirements. It is not clear from the proposal what would be the corresponding prudential protections imposed on Fannie Mae to self-insure. We also speak to the issue of consumer impact. And while, Dan made the point that the title acceptance pilot is focused just on the lender policy, not on the borrower's policy, I think there's still some important potential impacts on the consumer that haven't been fully evaluated here. For example, if the consumer looks and says, well, the lender doesn't need a title policy, why do I? The consumer may decide to just not have title coverage. And the second is you're taking the lower risk, if indeed this works as planned and you take out the lower risk product, right, you're removing that revenue stream, which then takes the higher risk loans that are left for the title insurance companies, and that's likely to raise the ultimate cost of title insurance down the road for these higher risk borrowers if you're taking the lower risk pool, the segment out of the insurance pool. So I really think that all these issues could have received more thoughtful consideration had FHFA been more transparent about the details of the pilot in advance and put the concept out for public comment. That approach would allow an opportunity for all the issues discussed here, both by HPC and by your organization, to receive fuller consideration. So with that, thank you for the opportunity to present these thoughts to you today.
Thank you so much, Ed. I really appreciate that. That was more than I can comprehend, but I will do my level best to wrap my brain around this before the meeting in Costa Mesa. If there are any interested parties that want to speak on this, the drill, please use the raise hand function, unless you're Sarge, in which case you'll just wave it in my face. Is there anyone that wants to speak to this? Perhaps they're waiting to do it in person so that they can throw fists at each other. Ms. Blosser, would you like to speak?
I'm going to be like Sarge and just, have a hard time finding the function here. Appreciated the comments on consumer protection from Ed DeMarco. I'm Elizabeth Blosser. I'm with the American Land Title Association, and I do oversee our consumer protection efforts. And the other thing I would just mention in the area of consumer protection is any sort of borrower fraud or identity theft, things of that nature that could happen in a refinance that would leave a consumer with some coverage concerns. So just add that to the discussion, and thanks for, this was a great conversation.
Thank you so much, Elizabeth. Appreciate that. Is there anyone else who wishes to make comments on this today before the meeting in July? All right. Well, thank you guys so much for your contributions to this discussion.
Very good. Thanks
Representative
for having us.
Oliverson, if
Yeah,
there's
thanks for having us. And Ed, very good to see you as always.
Nice to see you, Dan. All right, take care, everybody.
Bye.
you too. You guys, thanks. If there's anyone else, oh no, I already asked. I can't believe the two of them didn't want to hang around for the rest of our conversation. Representative Oliverson, do you have any closing remarks?
I do not, Mr. Chairman, but I sincerely appreciate both of the panelists for their thoughtful comments. Obviously, something we need to keep discussing, and I thank you for bringing it up today. Appreciate you.
No problem. Thank you, Representative. And thank you for everybody who contributed. We're going to continue to monitor this issue, and we'll have an update where things stand with the pilot during the July meeting in Costa Mesa. In the meantime, if you have any questions, please reach out to me, Representative Oliverson, or the NCOIL staff. And that's actually the exact opposite order. Please contact NCOIL staff, then Representative Oliverson, and then if you absolutely have to, please contact. Last on our agenda is an opportunity for comment and discussion on model laws scheduled for consideration of readoption 2024 NCOIL summer meeting. This committee has 3 model laws that are scheduled for consideration. One, as a reminder, per NCOIL bylaws, all NCOIL model acts are scheduled to be considered for readoption every 5 years. And if it's not readopted, it sunsets. So the 3 model laws in our committee are the Model Act regarding use of claims history information, the Model Act concerning state interpretation of state insurance laws, and the State Flood Disaster Mitigation and Relief Model Act. And I note that these models will not be voted on for readoption today, but it's an opportunity for any comments and discussions in advance of the July meeting where the actual votes will take place. The July agenda won't allow time for additional discussion on these models, so if you want to have any discussion on that, that should happen now, and we will hold the vote until July. I do note by the time of the July meeting, we'll have information on which states have adopted these models so far. So let's start with interested parties. Do any interested parties, non-legislators, have any comments or questions on any of the models? Okay. Are there any legislators who have any questions or comments? So rare to have a bunch of politicians who don't want to say anything, but I welcome it, to be honest with you. All right, well, thank you so much. And again, if you have comments that you'd like considered by NCOIL, you can contact staff or Representative Oliverson and myself. And specifically on these model legislation that it's going to be in our committee, please do at least CC me at forrest.bennett@okhouse.gov if you want anything to be considered. Is there any other business that anyone would like to raise at this time? Besides lunch? I'd just like to remind everybody that registration for the summer meeting in Costa Mesa is open, and please do register and book your hotel as soon as you can. I think at the hotel already approached capacity, and then we added a couple more rooms, and now that I have mine, I'm more than happy to make sure that you all get yours. All right, if there are no other questions, comments, or insults to be given, I will entertain a motion to adjourn.
Move to adjourn.
So moved.
So 2 enthusiastic motions to adjourn. Do we have any second?
Second.
Excellent. All those in favor of adjourning, please say aye.
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 I won't even ask for those opposed. All right, everybody, we will see you in Costa Mesa in July, and thank you so much for spending an hour of your time with me.
Thank you, Mr. Chairman. Thanks, everyone. Have a great weekend.